Wow, what a great way to start the morning off. The topic of investments and partnerships in Saudi has never been more relevant than today. I think we've all seen the last, 5 years where Riyadh alone, for example, if you were to look at apartments as your asset class, grew 10% year on year over the period of 5 years. And we've also started to see some real players, some real investors coming and, putting their capital where the intent is. The likes of Brookfield, BlackRock, who have, set up individual funds in partnership with PIF with significant allocations directly into Saudi. Of course, we have our fellow panel member with our Capita that have set up a special partnership to develop the node. If you've heard of that, it's a logistics park of 3 million square meters in Riyadh. I can tell you just personally from our standpoint, the number of investors that have knocked on our doors wanting to understand and figure out how to better invest, how to come and either set foot in Saudi or significantly expand their investments is, uncountable. It's just skyrocketed over the past couple of years. At the same time, we're also seeing some rapid evolutions and changes happening. And so, the foreign buyers regulation will significantly change how the market dynamics function. And of course, the white client tax, the rental cap, all of these will have, require some quick dynamic actions across the market. And I think come this time, Q1 of 2026, we'll all be seeing, which players are, lining up and in what way. And I can't think of a better way to get a bit of the thinking process into one single location than having our 4 esteemed members over here. So leaders across investment banking, investment companies, family offices, and of course the hardcore developers. And so I think, hopefully with this audience and with this lovely cast of panelists, we can get to some real hard-hitting discussions today. So just to get us started, I'd like to maybe, in the context of everything that has been moving, Waleed, would love to get your perspective on how you just start to see the outlook for Saudi over the coming years, and what does it look like at a macro level?
Assalamu alaikum, and thank you, Charles, for having me in this great session. What I would say that in the recent developments that with the regulations coming up, focusing on the real estate and the talking about allowing expats and residents and the GCC to have ownership and to change that ownership rule of some of the areas. In addition to that, some regulatory regulations or some laws that talking about, for example, the rent ceiling that would remain for 5 years without any change, for example. These made the market a bit cautious, investors a bit reluctant to get into a new investment in new deals. But at the same time, there were other factors positively affecting the real estate market, which is, I think, the easing of interest rates globally, which would affect the interest rate in the region as well. That would definitely encourage investors to get into real estate and maybe to have a better valuation, better pricing. So overall, as we all always say, that real estate that is needed all the time. Yes, there will be some corrections, and I think we can see that the corrections coming, especially in some areas in Saudi, and maybe Riyadh would be is the focus because the prices went too high. There will be some corrections, but my personal opinion that the demand will be always there, whether locally or internationally. We can see that foreign investors are coming heavily to invest in the market. They are approaching maybe the fund managers and the investment firms to better structure their access to the market. And this will definitely help going forward the real estate market. So this is in general.
Great. Wonderful way to get us started, a bit of the macro view and how things are going. I know, Waleed, we also spoke a little bit on the side. Obviously, Quara Holdings has had quite an impressive track record over the years through your different subsidiaries as well. We'd love to get a bit of your pulse on Quara and maybe some of the magic that's happening through some of the core subsidiaries that we discussed earlier.
Thank you. It is my pleasure to be here today talking about a dynamic sector in Saudi. Quara Holding established 30 years ago with our founder, Yusuf Shlash. And we had a clear vision about focusing two main sectors, real estate and financing. We established Dar Al Arkan in 1994, and we expand over the area in Saudi Arabia. We delivered over 15,000 units, and we have almost over 12 million square meter under development. And we listed in the stock market, Tadawul, in 2008. With the Vision 2030, supporting Saudi's company to become regional and internationally, we see almost now over 10 companies becoming very active in this with the vision. We established our international arm, Dar Global. We are the first company to be listed in London Exchange. While I'm talking about development and luxury apartment, because this is the demand. I mean, usually we don't build and we sell. No, we find out what is the demand. We see the demand in the last 3-4 years almost for the luxury selective project. While we are in Jeddah, we launched with Trump organization, Trump Tower in Jeddah. And it was very successful. I mean, in terms of bringing a new investor from different nationality to become attractive, especially with the new law coming January 2026. Recently, this year, we acquired large land in Jeddah, 4.5 billion Saudi riyal, and this was the largest acquisition in the Jeddah market this year. And we, with our partner, Trump Organization, we are putting together Trump Plaza, and this makes use between apartment, office space, shopping. And we can tell there is still a demand, as my colleague Waleed mentioned. There will be internationally demand, especially for type of luxury apartment in the next years. Thank you.
Excellent. Certainly impressive considering there's a component of a foreign investor. You're tapping into a luxury segment, which is the highest growing segment globally, and obviously has, very clear pockets of demand if done right in the kingdom. And so that's quite interesting to see that traction. Turning our attention to Khalid. Khalid, you have looked at this from multiple perspectives. And I'm just curious, with everything that's shifting and everything that's happening, will the next chapter and the new regulations impact all developers in the same way? Or are there going to be a bit of a divide of who's going to actually potentially benefit from these new environments and others that might not?
Good morning.
Good morning.
And thanks for having me. I would say the short answer, I think the game is just got excited. I do believe that those few months of change of regulations and the overall macro and micro dynamics, it just get the game shifting to a more of a professional setting. If you think about it, nothing have changed from a demand point of view. We're still going to have the Expo. We're still going to have the World Cup. It still is a very exciting and promising, not only a city as Riyadh, but overall as a kingdom. And like everything else, it has its own road. I think what's different now that the professionals have to come into the play. And I think it's an opportunity for developers to up their game, to reach out and work in a much more collaborative model, where not only the speculative hot money part of the equation was driving the market, now it's the real demand and supply, which also means you will have to adopt your own business models, and you have to adopt your way of thinking. It's not built and somehow it will work. You will have to really go through the process of knowing what you want to do and know it and do it better, faster, and at the right cost of level. I'm just going to give you an example in terms of the demand side of the story. A few years back, there were only 6,000 Chinese in Saudi Arabia at large. Today, there is 200,000. If you talk to a lot of the businessmen or Chinese, that they have moved and looking to be residing for a while in Saudi, they will tell you this is Shanghai 20 years ago. And a lot of us and a lot of here in the audience probably have seen what happened in Dubai and Singapore and other markets. So we're just in the beginning of it. And it's like any other market. Real estate is a cyclical business. Development is a long process, right? This idea of speculation is interesting, but it has to have an end. So I'm very optimistic on the outlook side of the story. Thank you.
Excellent. But that's an interesting statistic. The number of Chinese also visiting the kingdom has increased significantly naturally as you have more than located here, but also with better connectivity. And I think how that evolves with an increasing number of inbound visitors and the hotel offerings is going to be quite interesting. And on that note, Mohamed, you have, I think it was 4 hotels over the past 3 years or so.
Yes.
Including a pretty sizable hotel in the form of Mina Gate. We'd love to get a bit of your perspective from what you've kind of seen and what has been the focus, and hence what becomes a bit of the outlook as well going forward.
Of course, the growth of the population is not only on the residents, but also on the traffic passing by. I think it's
good.
Okay. It's also on the traffic passing by. So the hospitality angle of it is a key for our group in terms of investment, and it's a core pillar in terms of the Vision 2030. So we have developed 4 hotels over the last 3 years. A massive one, 1,100 rooms in Mecca, as well as other 3 in the eastern region in collaboration with the Intercontinental Group. So we believe that the hospitality and especially the affordable luxury is the way to go, and it's the one that is needed in terms of supply-demand in the future.
Wonderful. Let's turn our attention. So we talked a bit about developments, we talked about hotels, we've talked about the luxury segment. Let's talk about the capital, right? Because all of these projects, all of the future requires smart capital, I would say. I'd love to get a bit of the perspective, and particularly now with foreign buyers coming online, what does the capital outlook look like from a financing standpoint, potentially from an FDI standpoint? What is the pulse, Waleed, that you're seeing and hearing from some of the financial community and what their outlook is and what their appetite is for the kingdom?
Sure. Well, capital firms depend on their day-to-day and their businesses and their fund structures on capital coming from third-party investors. This will always be affected by the market dynamics, interest rate, inflation, how capital is moving through other asset classes. For example, when the interest rate were high, we saw investors going to the money market, for example. If they are getting 6-7% from just depositing their liquidity with banks, why would they, take the risk of investing in long-term illiquid assets? Now we can see a bit of a shift with the interest rate reduction, but at the same time there is a challenge of lack of liquidity in the market. And if you see the ratios of loan to deposit in the market, they are too high. They are maybe the highest in the last 5 years. So this shows that the lack of liquidity. This will definitely bringing also opportunities for private credit, and we can see that a significant move to financing funds. Luckily, the CMA allowed investment firms to establish these financing funds 4 years ago. And maybe just to mention that Arbah Capital was among the first capital firms to establish these funds. We have 3 private credit funds currently, and we are moving on that direction. I think that would create good opportunities for investment firms, especially that the banks are being very selective in terms of lending. They are, because of the lack of liquidity, they are trying to choose the projects that are with better potential, income-generating aspect of it, let's say, and shying away from developments. And this is what we've recently seen. The Sukuk issuance is also another element that would be, I think we will see a growth in the Sukuk issuance to solve the liquidity problem. But again, foreign direct investments, investors coming from outside could also be an element to help in terms of creating liquidity in the market.
Can I jump in?
Please.
I think our best decisions in spending, it happens when you're short of cash. So yes, liquidity on the short to medium probably is a challenge, but also it means that everyone will have to be very selective in their time, in their efforts, in the projects that they're going to be pursuing, in the type of the project itself. And probably we'll see a much more less generalized and more very focused real estate and non-real estate investment opportunities that will make a lot of excitement. And the challenge will be to pick the right winner.
Very nice. I'm just curious, Khalid, was that a driver when we talk a bit about the node, for example, which is a clear, I would say, perspective and insight that you've had along with our capital around logistics, and that being, of course, an important segment of the entire industry. How does that, how do you look at alternative or new asset classes in the perspective of a sector that's still being developed and still growing over time?
Well, clearly within Vision 2030 and all of the real estate and the giga project that is going to happen, one thing for sure, apart from the quality of life and the tourism focused and other drivers, is there has to be a supply chain that support that. We have to have a very important and expanding digital infrastructure that support it. And hence you see a lot in the last few months and more of announcements and probably more to come in terms of digital centers and data centers and so forth and so forth. And as well as the supply chain, either for the e-commerce or for the construction and likewise. And that's where we thought and decided that industrial logistics, real estate vertical is very important component. It might not be as defensive as other sectors, but it has a much more interesting long-term play. And I'm sure there is asset classes that any one of us will be able to identify, focus his skill set, and work on it.
Fascinating. There was a lot of discussion over the last couple of years around alternative asset classes like cold storage, data centers. If you look at the large hyperscalers, so the large tech companies that we all know, that are very vested in AI and Gen AI and all the hardware behind it, their investments in data centers, so they're issuing the acceleration of the debt that they're issuing for data center infrastructure alone in the last 2 months has more than outpaced double the annual typical investment that they've had in that particular area. And so that just shows how quickly things can move and evolve, and that has a direct implication on the type of real estate and infrastructure that's required. And, I've heard a lot around niches and lifestyle brands, and frankly, you've also launched your own, I would call it a lifestyle brand. I don't know if you would call it that. I would call it that. And I think it's fascinating to see the evolution of the developers. I think we're moving away from the very standard, expected type of typology to very, more evolved, more targeted, more mixed-use types of developments. And I think it's going to be interesting to see how that plays out. Now, of course, that requires not just local capital, not just attracting international capital, but also attracting more of the international financial players to be established here. And Waleed, I know you have a bit of a perspective with some of the banks that have set up or are looking to set up, along with some of the major developers as well. Recently Heinz has announced that they want to set up their regional headquarters in Riyadh. How do you see that playing out from an ecosystem standpoint?
Saudi Arabia become the fastest growth lending expansion in the region for real estate. In 2025, it reached spent 160 billion. Saudi is up from over 50% from season really in 2020. The mortgage Saudis have to make is the retail mortgage, which is almost 700 billion, and this is driven by the small program by the government. The ownership rate Saudi now reach over 65%, up from 47% on 2016. The second more example, the problem, which is given grow faster than the city, because the government make you for the tourism, for the development, it teach 250 billion. The banking sector is already now 30% of very go to leasing. This is quite high from the Saudi market. Come مدير استشراف لا تنتشر starting to come to the market under the Vision 4030. There is supporting for headquarters companies to come with Saudi is very want to take a capital faction reading of the quarter. Now it's over 670 headquarters there, but he gave him working issue announced their headquarters in Riyadh, as you mentioned, for other international comes to the market, because it's need for especially in the foreign ownership current place we will see out of the and not only the Riyadh yet, but you see also in Marka Al-Badila, because this is the first time Saudi Arabia opening this market. People wait for this for long.
It's great. I'd like to add to that in terms of financing, as we at Rajhi Invest would operate our debt portfolio regionally, not only locally. Of course, borrowing from Saudi banks is our bread and butter. However, we also borrow and get debt from other GCC banks. It's more or less very similar restrictions, and we benefit from a much lower loans to deposit ratio, as well as a bit of arbitrage between the IBOR and the CIBOR and the softening the side, which give us a head and a cheaper finance.
It's a great point, and I think we really see more and more of that accelerate. I recognize we're near the end of our panel. I will ask each of you to share your, and this is something that Khalid brought up a few days ago, but your crystal ball perspective. If you have to make one prediction for this sector over the coming years, and it could be of any particular perspective, what do you see be something that will emerge quite prominently over the coming years? And Mohamed, maybe I'll start with you, and not to put you on the spot, of course.
This region, especially in the Kidal Saudi area, is becoming a destination because you make a better living, it's more safe, and it's the quality of life. Most of the services are automated, so I expect the population to grow internally and externally, not only from the region but globally.
Wonderful. So becoming really a metropolitan, country and cities. Waleed or T.
No, I really share the same comments with Mohamed. I think the demand will continue to be there, whether internally or from the GCC and other countries. I think the maybe next focus would be maybe the second-tier cities. I'm sure that they will get more focus from the public and the private sector. There are many asset classes that would need to be there and maybe to develop going ahead, from hospitality, logistics, co-living, and hospitals, education. I think, as we see, that real estate is needed in all the other sectors, all the asset classes. Demand would be there, but I think there would be more maybe creative ideas of how can we get more liquidity into that asset class. As I said, private credit is one important asset class that we will see more of a growth. And when we talk about creative ideas, that the dry funds that we did not mention in the session. Dry funds is a very creative idea that is when the landowners, developers, and other, let's say, partners coming into in-kind to the fund structure, helping reduce the need of capital and creating the project or the asset class or the opportunity, and then getting their money at the end. I think this is a beautiful idea, and we can see that more of this coming in the future.
Waleed mentioned the second-tier cities, and I think that's a very important in the crystal ball outlook. Is I believe that there will be a tremendous opportunities and development in these cities, both in as far as quality of life, real estate development, or in the touristic side of the story. And we are definitely, as Rikaz, we're doubling down on that. I think overall, in terms of destination that is being created, the likes of Red Sea, Al-Ula, the Hayals and Asirs of this world, you will see more capital, but more of a success. I think this year alone, Asir has had a growth of 80% of GCC tourism traffic. And I think we are just seeing the start of that. Lots of innovation, in my viewpoint. I think in terms of, depend on the asset classes, we will see a different type of grade A offices, whether in the major metropolitan cities or elsewhere. Lots of build-to-suit, and that has to be taken into consideration. And obviously, and I think it's time for that, because to be very honest, when and how big Riyadh population is going to be is a sort of something to debate on. but by all measures, right, it's a city that is expanding with a serious infrastructure, including transportation issues, that I think once it's became part of the solution, it can open up a bigger opportunities. And let's not forget, 70% of the population is still under 30, and that's another potential there. Thank you.
I agree with the demand there, but there's also probably the infrastructure that's already stuck and a good edible now scouting. Case and medical Spanish, regardless edible, you pay for and as only the high by it's a bold the major project that he the area keep the area and Habak. This is all good demand potatoes around. So that all this together, according to how the auto the expansion in GCC, this will increase the demand in the future.
Wonderful. This has been great. Folks who enjoyed it as much as I have. Thank you for today. And, you know, maybe we'll sit here again in a couple of years and see which of these crystal ball predictions have come through and which ones have surprised us. Have a wonderful one. Thank you.